Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on natural gas today. It is December 21st. This is what's become now our daily update on natural gas. We're in this pretty big decline, and I just want to make sure folks don't get hurt. I saw a lot of comments in the section. If you're new to this channel, we analyze price action, and price action is the way that you're able to analyze trends. Put simply, prices trend, right? Sometimes they trend higher, sometimes they trend lower, sometimes they just move sideways, they consolidate, and they're not trending. So they're either trending up, trending down, or trending sideways, and we can use price action to discern what direction they're moving and put ourselves in a good spot in terms of the odds being in our favor. We want to go long when it's trending up. We want to go short when it's trending down, or just get out of the way. We don't have to go short. So we've been talking about how we use cycles analysis. Again, take a look at links in the description if you're not familiar. That helps to just kind of quantify the price action a little bit better, qualify it, I should say. So we had this 30-day cycle topped out on day 22. And now we have this little cycle that's just started. It's currently day 11. As I said, it's December 21st, Wednesday, middle of the week. And so far we have our high on day 5. That is $7.10 is our high. And you can see from this cycle low to this high, that was like a 32% rally. So a pretty nice big move, looked pretty convincing in real time. Then we consolidated, now we've broken down. We're going to do two things in this video that we haven't done in the previous videos. We're going to take a look at the intraday price actions. We'll look at some hourly charts and a little bit below. We'll look in a little bit more detail. You can see we're making new lows as we speak. It's about 2 o'clock, by the way. And the low from yesterday was $5.25, call it $5.26. So we're here at $5.27. So we're just a cent above, a penny above. And remember, the way trends work, trending higher means higher highs, higher lows. Trending lower means lower lows and lower highs. So we're trying to make a lower low here. This was our lower high. And when we zoom into the lower time frames, we'll see that a little bit easier. But you can see we're below these lows. Like you can see this line here tells you where price is. So we're below these lows. And as I said in the previous video, we're seeking out this low next, 475. It's not rocket science. It doesn't mean we will certainly get there 100%, but the odds are very good, just like they've been good as we've been talking about it, right? That this consolidation, whatever direction it breaks in, it's going to trend for a little while. Well, we consolidated, we broke. What direction did we break in? Obviously lower. And so we may trend for a little bit. And that's where the cycles come in. Remember, this was a 30-day cycle. The cycle before that was 33 days. This thing here, the cycle before that was 21. So at day 11, we have a lot of time before we get the cycle low, which means we can expect to continue to move down in this stair-step fashion. So I hope you didn't get caught in this candle here, because at one point we were green today, and we'll talk about that. So we probably go down again, we come up, make a lower high, down, lower high, down, lower high, until we make our cycle bottom. Who knows? Maybe it's day 20, maybe it's closer to day 30. We don't need to guess when that's going to happen. We just watch the price action to make sure that we're positioned. And so again, don't get caught in these lower highs. Today was a lower high. And again, today started green, and that's why you want to make sure that you're looking at the charts and not just, I'll go to if you look at just the ticker, you can see this ticker says we're down 0.73%, right? Like, that's deceiving. 0.7% is bouncing around, obviously. One point we were earlier we were higher, right? Like, what was the high for today? It was $5.60. So this was green, but even though this was green, we were still just an inside day. And I'll just be really clear about that. That just means that we're inside. No, I want to get rid of that. Not a horizontal line, horizontal ray. Like, what it means is we are inside the range of the previous candle. So in this case, again, it's the daily charts. We're talking about the daily candle. So a big chop zone. The high from yesterday was $5.90. The low was $5.26. We're now, again, trying to break down below that range. We're starting to bounce a little bit, and we'll zoom into the lower time frames. But when you saw this candle this morning, even though, again, this was green, it's like, oh, okay, we're bouncing. Yes, we're bouncing, but into what level? We're just bouncing into a lower high, right? And so there was nothing to get excited about as we were in inside day here today. And this is going to happen again. Just don't get sucked in by the lower highs. And so let's zoom into the lower time frames. Let's look at the hourly. So this is your candle. I just said we were bouncing. There you go. So this is your current hourly candle is trying to go green. It's trying to make a swing low. This candle closes in 43 minutes. Let's zoom in. Let's look at like the 15 minute, right? So boom. So this is a bearish outside candle, right? Because you can see it made a higher high above here, and now it's making a lower and then it made a lower low and closed red. But it's trying to become our swing low, right? That's how this works, folks. We now need to go above the high of this big bearish candle here, right? Because this is a candle that's marking our low. So that would be a high above $5.35. Not too far from where we are here, right? I mean, we're talking about another 5 cents up. And then the idea is that gives you the possibility of starting a little uptrend, right? And again, this is your 15-minute chart. So this is like micro zooming in, but this is how you get a little rally going. It starts on the lower time frames and then it cascades to the higher ones, right? So we are trying to rebound. And that also means we have to hold this low, right? Because if we break this low, then it's a failed swing low and we continue the cascade lower. So that's the lower time frames. And again, 475, certainly by the end of this cycle, we talk about how this cycle probably ends in early January. If anything, we may find ourselves down around 360. And again, just going to the weekly charts. So this is your weekly chart, just standard stuff. What you're able to do in TradingView is create custom time frames. So let's look at a 2-week chart. So what this means is, and I'll actually get rid of the drawings because that will make it harder to see. So what this is doing now is every candle, instead of being 1 week, is 2 weeks. And what it's done is you can see it's taken this current weekly candle and like this is the current weekly candle, and this 2-week candle will, or I should say, again, each of these candles is 2 weeks. This is the previous 2 weeks. So last week and the week before last, and this is the current week and then the next week. So this candle doesn't, so to be clear, this candle doesn't close until next Friday, for instance. So we have quite a bit of time for this candle to go. And you can see what's happening with this candle. It's just like the daily chart, right? Like, I hope you see that, right? We're making a lower low below the previous candle. And in that case, that's 5.337, right? And so the point of this kind of analysis is the higher the time frame, the more important the signal. So if you're looking at a monthly chart, it's a more important signal than a daily chart, obviously, because it's a much higher time frame. But what about if you wanted to understand what's happening somewhere in between the week and the month, right? That's what the 2-week candle does. Like, almost think about that. 2 weeks is half of a month. So it's a more powerful signal than the 2-week candle, but it's a little bit less important than the monthly. But more importantly, it almost gives you a preview as to what the next monthly candle is going to look like, because you're able to see a little aggregate version of it. So in this case, it's not good, right? What is this looking like? What is it telling us it wants to do? It wants to do that, right? It wants to go down into like fall below $5 and eventually try to test that 475 level. This is another way of saying we're in a downtrend on the 2-week chart in the same way that we're in a downtrend on the weekly chart. This just kind of uncovers some levels for you. Now, what I'll say is, as you get more experience, you can kind of do that. You can do this yourself, right? This candle, and this candle are that 2-week candle we were just looking at. Flash back. You see how it's green? So you combine a green candle and a red candle, and because of the nature of where we are, like price is like right now, or I should say where it closed, it ends up green. Like these two candles are that one green candle, or this green candle. And then this current candle right here is that 2-week candle, waiting for more price action to happen next week for this candle to close. And again, my expectation is this candle fills out, pulls back. Now, we know we're in daily cycle decline, so that would be our expectation, that we continue to decline into early January again. So just kind of filling this candle out. But this is an important little, like, a good way for you to start to see visually how the price action works on different time frames, even ones that aren't very common, because no one really looks at a 2-week chart, yet it is actual data and it is meaningful to the trend, to what's happening. So definitely a helpful little sort of trick. And I also look at sometimes I look at I'll do this more for crypto than anything else. I'll look at the 4-day candle. So that's kind of like half a week if you think about it, right? That's especially important for crypto, which trades 7 days a week. And look what's happened with the 4-day candle. Look how bearish that is, right? And forget these, I'll take the drawings off. Forget those. Look how bearish that is. And this candle closes in 6 days. So basically it closes at the end of this week. And then we'll get another new 4-day candle, which again, it's all about looking in your mind's eye, what might be the next thing to expect, right? That would be my expectation for the next kind of 4-day candle to complete that weekly candle and the 2-week candle that we talked about. So lots of downside ahead. Please be careful. Don't get hurt. You want to be careful not buying into these higher lows and getting sucked down into the next lower low. And again, I'll say, I've seen in the comments a lot of notions about we're going to have a rough winter, it's going to be cold, yada, yada, yada. You can't trade the news. Like, there's no edge there, right? Like, look, observe what price is doing and listen, right? Just listen. I say, let's see what happens when we get to 475. Do we get a strong bounce? Do we sink down to 360 from there? Those are the real questions that we're going to want to kind of uncover. So we'll leave it at that for our daily update on natural gas. If there are any questions, please put them in the comments section. If you found value here, I'd ask definitely like the video, subscribe if you haven't already. Make sure you hit that notification button because I put these videos out on a relatively timely manner to try to give people a sense of what's happening. So make sure that you're getting the latest content. But that's all we have for today. We'll leave it at that for our natural gas update on December 21st. Thank you.